Welcome back to Hidden Business Risk. I'm Dan Butler. Today we're unpacking a subtle but expensive problem. A U.S. company hires a contractor in Germany to run sales, and a routine month later, they're staring at withholding notices, delayed invoices, and a flag that says, maybe you've got a permanent establishment. That's our micro case. Stick with us. We'll walk through what actually happened, what to check right now, and a 30-day sprint you can run without turning your business upside down. I'll sketch the micro case briefly. A small SaaS company in the U.S. engaged a commission sales contractor based in Berlin. The contractor used their local bank, invoiced monthly, and met clients at a co-working space. After a sale, the client's finance team said, "We need a local invoice with VAT," and they withheld some fees for social contributions. Then the local tax authority sent a preliminary question about whether the U.S. company had a taxable presence. Total surprise for the founders.
That's a classic cascade. From a legal perspective, a few ordinary facts, regular client meetings, use of local facilities, and direct sales activities can look like permanent establishment triggers in some jurisdictions. The problem is not dramatic on day one. It accumulates. People think, we hired a contractor, so we're fine. But the reality tests are fact-driven, not checkbox-driven.
And operationally, the evidence trail is what auditors ask for. Who signed the contract? Who received the invoice? What bank was used? What systems, email, calendar show those client meetings? If you don't have that tidy, you're guessing. Guessing costs money when someone requests records.
Quick reality check for listeners. We're not giving legal or tax advice. We're giving an operational triage, things to look for now and conservative controls you can run while you get professional help. Jessica, if someone wanted the short list of facts that flip the switch from contractor to employee or create PE, what are the plain English failure modes?
Short list. 1. Regular control or direction. If the company dictates core work hours, tools, or performance metrics. 2. Economic dependency. If the contractor's revenue is primarily from that one company. 3. Presence and habit. Regular client meetings, a local phone number, or anything that suggests the company is doing business through a local base. For PE specifically, look for a fixed place of business used by the company's personnel to habitually conduct business, or an agent habitually concluding contracts.
From my side, add digital footprints matter. Does the contractor log into client portals from an IP address in country? Do calendar invites show recurring client visits? Those timestamps and locations are the kind of simple evidence that either supports your classification or undermines it.
Okay, let's talk dollars and timelines. Imagine the withholding reclaims, payroll back pay, and benefits. What could that look like? Jessica, and then I'll put a prioritization heuristic on top.
Numbers vary by country, but think in categories. 1. Withheld payroll taxes and social contributions that the company may be asked to cover. 2. Penalties and interest for late filings. 3. Potential VAT or sales tax adjustments. And 4. The administrative cost of responding to an inquiry and hiring local counsel. For a mid-market contractor, back pay and contributions for 2 years can be a material six-figure exposure in some places. That's why you treat discovery seriously and quickly.
Let me add a practical triage heuristic. How to pick which hires to inventory first. Ask 3 questions. Revenue impact, who brings or manages revenue streams. Nexus likelihood, who spends consistent time with clients or local facilities. And legal entanglement, who has local contracts, invoices, or a local bank account. Rank hires by those answers. Top 3 get immediate inventory. That kind of prioritization saves time and stops you from chasing low-risk folks first.
Walkthrough time. What should teams collect in week 1? Here's an evidence-first checklist. Copies of contracts or engagement letters, invoices and who paid them, bank details used for payments, calendar entries showing client meetings, email threads discussing scope, and any local registrations or local telephone numbers. Capture screenshots and export email headers if you can. Preserve metadata.
Good. Now, a few quick low-tech controls you can add while you assemble evidence. First, conservative onboarding language. Make the relationship and deliverables crisp. State that jurisdiction of contract is the company's home state, and require the contractor to confirm they're responsible for local taxes unless a written exception is provided by counsel. Second, add a short questionnaire at onboarding that captures local tax status, bank country, and where the work is habitually performed. Third, ask payroll providers for an evidence pack on file for that payee.
2 legal snippets to help. 1. Conservative termination/transition language. Allow a short notice period and a clause that clarifies transition work without implying employment. 2. A clause that requires the contractor to notify the company if local law treats them as an employee or creates withholding obligations. Those clauses are not foolproof, but they buy time and clarify expectations while you get advice.
And when you call payroll providers, ask exact questions. Do you support payees in X country? What documentation do you keep for foreign contractors? Can you provide a payment history export with bank routing and receiving country? And do you have a standard withholding practice for that country? Insist on written answers you can attach to an advisor packet.
Right. Let's map this into a reversible 30-day containment sprint. Week 1, inventory and immutable evidence capture only. No changes to payments unless there's an immediate legal risk. Week 2, pilot conservative containment on 1 high-risk hire. Clarify scope in writing, pause ambiguous new engagements, and engage local payroll counsel for that hire. Week 3, implement provider changes or reclassification after advisor sign-off, and execute communication scripts to preserve relationships. Jessica, any tweaks to that phasing?
That phasing is exactly the mitigation I like. Preserve evidence, avoid hasty terminations, and get counsel involved before you pull any payment levers. Also, document the decision points, why you paused a gig, who approved it, and the advice you received. That audit trail reduces second-guess risk later.
Operational note. When you run the week-by-week tasks, assign a single owner for each top risk hire. Don't make it a committee. Give them an outreach script for the contractor and a checklist of items to capture. If the person is technical, ask them to export calendar metadata and email headers. If not, ask them to request those from the contractor and document the request.
Let's do the panel triage step now. Pick the top 3 hires or regions most likely to create risk and assign owners. Jessica, who would you put top of the list? Sales folks in market? People handling contracts?
Top priorities. 1. Anyone who routinely signs deals or negotiates terms with local clients. 2. Revenue-generating staff who meet clients in market. 3. Long-tenured contractors paid locally with client-facing roles. Those 3 categories combine higher nexus likelihood with immediate fiscal consequence.
I'd add technical staff who run servers, handle onboarding in country, or deploy localized services. They can accidentally create a fixed place of business if they set up infrastructure or have equipment in a local office.
All right. Quick wins before you run the sprint. 5 immediate actions. 1. Inventory top 3 hires by the heuristic we gave. 2. Get signed copies of engagement agreements into a single folder. 3. Export invoices and payment paths. 4. Send the onboarding questionnaire to ambiguous hires. 5. Call your payroll provider with the exact questions Eddie suggested and save their written responses. Those 5 steps buy you options.
And I'll repeat, this is not legal or tax advice. Before you reclassify anyone or withhold pay, engage local counsel and a payroll expert. The kit on hiddenbusinessrisk.com includes sample conservative language and scripts to use, so you don't have to draft them from scratch.
One last operational tip. If you get a tax authority inquiry, don't delete anything. Preserve communications, calendar entries, and payment records. Lock them into a read-only folder and flag an owner. Evidence preservation beats frantic reconstruction.
Good. We've turned a scary-sounding problem into concrete next steps. Download the Global Payroll Safety Kit and the 30-day sprint at hiddenbusinessrisk.com. It includes the onboarding questionnaire, payroll provider scripts, conservative contract snippets, and the weekly tasks we just walked through. Run week 1 as an evidence capture exercise, then bring in counsel for the next steps. Thanks, Jessica and Eddie. This was really actionable.
Thanks. Remember, measured steps preserve relationships and limit exposure. Reach out to local counsel before making changes.
Thanks. And if your team needs help extracting digital evidence, start with calendar exports and payment histories. They answer a lot of questions quickly.
That's it for this episode of Hidden Business Risk. Go to hiddenbusinessrisk.com to grab the Global Payroll Safety Kit and the 30-day sprint. See you next time.